Hello, this is exercise 2-6, and it will illustrate the purchase of less than 100% in the stock of another company. So exercise 6. Quail Company purchases 80% of the common stock of Como Company for $800,000. At the time of the purchase, Como has the following balance sheet. So here's Como's balance sheet. Fair value of the assets are as follows, and we're to do the value analysis and determination and distribution of excess schedule under three alternatives for valuing the NCI. The value of the NCI is implied by the price paid by the parent for the controlling interest. Market value of the shares held by the NCI is $45 per share. And the international accounting option, which does not allow goodwill. We're probably not going to do C at all. And then we're supposed to do the elimination entries under each scenario. Okay, so we're buying 80% ownership. Let's see what we're doing. We're paying $800,000 in cash. We're paying $800,000 in both, in all the situations. We're not going to do part C. So we're paying $800,000. All right, then we need to copy the balance sheet in. Cash equivalents are 120. The inventory is 200. The land is 100. The buildings are 450. It's 230. And we have current liabilities of 200. A bond payable of 400. Equity is 100, 150, and 250. Okay, let's see. Fair values of the assets are as follows: 120 for the cash equivalents. 250 for the inventory, 200 for the land, 650 for the building, and 200 for the equipment. And the liabilities stay the same. Okay. So we're doing part A, implied fair value. Okay, so the parents bought 80% and they paid $800,000 for that. Okay, so that's the given that we know. So to get the company implied fair value for part A, we're basing it off of what the parent paid. All right, so you're going to do what the parent paid divided by their ownership, which is 80%. And then the NCI is either going to be 20% of that, or you can subtract. You know, however you would like to do it is fine. And we're going to do all part A first. All right, the fair value of the net assets is the fair value of the assets minus the fair value of the liabilities. So 820. And then if you want to, you can do, they've got 80% of that, and then you can subtract to get the NCI's share of the fair value of the assets, and then subtract it from what's the implied fair value is, and that gives you your goodwill. And copy that on across. Okay, so now down to the determination distribution. The fair value of the subsidiary, this can come from right here. So you can copy that if you like. All right, common stock paid in excess and retained earnings. You can pull those numbers from right here. Up on that balance sheet that we did. All right, this is of the subsidiary. We need to add it up. Okay, and then I usually just carry this on across, so that equals that. Carry across. And then our interest required, we have 100% under the full amount, 80% under the parent, 20% under the NCI. And then to get each shares of book value, you multiply the total equity or book value times the share of ownership. Okay, and then to do the excess, it's the fair value of the sub minus the book value. And you can copy that across as well. So you'll need these numbers when you're doing the elimination entries. Okay, remember that we will use those. So let me go ahead and like those. All right, these accounts that are adjusted, that's the ones up here that have changes. So really all of these right here are going to be adjusted. So just copy those down. Oops, I don't know what I did there. Let's see if it worked. Yes. Okay, so inventory went from 200 to 250. So 50 for inventory, 100 for land, 200 for the building. So 50, 100, and 200. So 50, 100, and 200. 50, 100, 200, and then equipment's going to go down by 30. Okay, now remember that this number right here, where we currently have 320, that needs to equal this 500. All right, and we also need to get goodwill in here. So goodwill is 180. And if we copy the goodwill into here, that should make it balance out. If that doesn't make it balance out, then you're missing something up here above. Okay. Then we need to do our elimination entries. Okay, that's the entries that they're talking about. All right, so the first elimination entry is the EL. And that's to eliminate our share of the equity of the subsidiary. Okay, so we're gonna, sorry, I keep being interrupted. So for the eliminating entry, we're going to debit the equity accounts of the subsidiary. So you want these accounts here. All right, and remember these are all for the sub. So I'm going to put in sub. I don't remember the name of the company. So sub it is. Okay, and for the amount, we're going to use their amount. So it's 100,000. But I only bought 80%, so I'm only eliminating 80% of it against my investment. So common stock was 100 times 80%. Paid in excess is 150 times 80%. And retained earnings is 250 times 80%. Okay, then I add those up. And that goes against my investment. Oh my gosh, really better. Investment in Como, but I'm just going to put, well, I'll put that. Okay, so this is actually where I have sub. This is Como. Let me change it so it's not so confusing. Why I did that? That's annoying. Okay, then we need one to adjust these accounts up here. So I have D for distribution. All right, so it's going to be all these guys. I'm going to go ahead and copy their amounts. It's just easier. Okay, but I need to fix the equipment because since it's a negative, that is actually a credit. So I'm going to skip a line and come over here and put it on the credit side. And I'm skipping a line because I need to get in my goodwill. So goodwill's got to go in here. And the goodwill was for the 180. Okay. Then I have to finish off my investment. All right, I have 400 already. My original investment is 800, so I need another 400. And if you notice, it's also right here. So I need another 400. But if I double check this, this is not going to balance out. And I'm off by $100,000. And if you look up here, that is the NCI's share. Okay? So for that, you would credit the retained earnings of Como, or I usually credit what they call the NCI's share. That's what I'm calling it. And that is for 100. And that's basically their share of the equity plus these adjustments here. Basically, it's these adjustments. All right, what color is that? Blue. Okay. So that was for part A. Part B, the balance sheet is exactly the same. Okay, really a lot of it is the same. This balance sheet part is the same, so I don't need to redo that. Where they change it up a little bit is that the parent price, we paid $800,000, so that's a given, that stays. But then they tell us over here in Part B that the market value of the shares held by NCI is $45. Okay, so Como, you have to go up here and look. Como had $100,000 of common stock at $5 par. And the NCI owns 20% of that. So where can I write that out? So common stock outstanding equals the $100,000 divided by the $5 par. I'm sorry. Yeah. All right, so right now, that's common stock outstanding. Sorry about that. So it equals $100,000 divided by the $5 par. So Como has 20,000 shares currently outstanding. All right, the NCI owns 20% of that. So they own 20,000 shares times 20%. They own 4,000 shares. So then when you go down here in Part B and you do this, you have to put their value in. All right, you can't do the implied value and then subtract. So the NCI value is 4,000 shares times $45. All right, and notice it's a little bit different, okay? So then in this case, we have to add these two together. And then from there on out, everything is the same. It's just the split up of stuff is a little bit different. All right, so this is still going to be the 820. Right? We still get 80% of it. They still get 20%. We're still subtracting price paid minus fair value. There's our book value. Notice our goodwill. Our goodwill changed a little bit because our implied value is a little bit less. Okay, so everything, this top part changed a little bit. So this is going to be 980, 800, and 180. This part stays the same, so I'm just going to copy this. This is 80, this is 20, 700. Actually, I can just copy this. All right, notice that part stayed the same, but this excess is going to be a little different. So 980 minus 500, where excess was 500,000, it's now 480. The parent part stays the same, but our NCI is going to be a little different. Oops. Okay. All right. The distribution stays the same. All right, we got to put our goodwill is now 160. And notice the 480 equals the 480. Okay, so the elimination entries. First one is exactly the same. So I'm just going to copy it over. Right, and then the second one, It's basically going to be the same, so I'm going to copy it over, but some of the numbers are going to change. So I'm going to copy this one on over, because the basic entry is the same, but if you remember, goodwill is 160 now. All right, so this is 160. And now I'm not balancing out. I'm off by 20,000, and it's because for the NCI where it was $100,000, it is now 80. Okay, that is all that we're doing on that one.